Okay, did everyone write their name? Great. So that way you get it back if you lose it, right? You have it with you. Period 5, 4, 8, whatever it may be. Okay. And then I want you to take a look at the entire page before you start writing anything. Okay. So that way you know where to write what, because they're almost always no chronological order to what's there. It's just kind of like all over the place. So you need to know what kind of information you need to extract from the videos. Okay. So first box says, how does a tax system work? It should be a flow chart of going from one thing to another. Second box says, types of tax Americans pay. Third one says, where does the money go? So you're doodling some examples of where that tax money goes to, okay? Tax is the big picture, has to do with the progressive tax that's labeled right here behind this computer. What it's meant by progressive tax will go into that bubble. Expenses and income, it looks like we're putting in definitions down there, and everything else is just visual support. Whatever you want to add to it, you're more than welcome to add to it, okay? Next page, sales tax. This one's taking a really close view on sales tax and how it works, and I'm going to tell you how to calculate it. There's a calculator right there. We'll go ahead and write down how to calculate there. Next page. Here are some different forms. We're going to define each type: W-2, W-4, 1040, paycheck, and tax withheld. Okay, this is a flow chart on the right that goes from top down. Top is going to be how we are going to, who fills out the W-4 form. And then how does that W-4 get used by employers and employees? What happens as we're using that? And then how income taxes work. Okay. Last one is going to be filing your taxes. And you'll learn about the tax table and the brackets that you hear about, tax brackets. Dependents, what's considered dependents, what's considered deductions, what's considered withholdings.
So a lot of folks are familiar with government doing things like building roads and bridges, or providing schooling or parks, or at the federal level, national programs, or say the military. And the natural question is, how does the government pay for all of this? And the simple answer is it's primarily through taxes. There's other sources of revenue as well. But when we're thinking on a local level, taxes are things like sales tax. You buy something, you pay a little bit extra. That extra percentage does not go to the retailer or whoever's providing the service. It would go to the government. There are things like property tax, especially at a local level, where if you own property, every year that property generally is assessed what the value is, and you have to pay a percentage of that value to traditionally the local government on an annual basis. And then when you go to the state and the federal level, probably the most significant tax, in fact, the most significant tax, is income tax, which is a tax on people's income. Now, income tax, you can broadly view it as a tax on a percentage of your income, and it can be significant depending on how much money you make. It's not uncommon for between state and federal taxes for people to, and things like Social Security tax, etc., for 20, 30, 40% or more of someone's income to go to these collective income taxes. So it is a significant part of folks' income. So it's definitely something that you should pay attention to. Now, I mentioned, generally speaking, it's a percentage, and that percentage, generally speaking, is going to get larger and larger the more that you earn. And that's an important point, that it's not just a flat percentage, which you still would pay more if you make more, but the actual percentage goes up.
Next, let's talk about number 2, how the tax system works. So theoretically, the tax code and system are very simple, okay? It is set up in a way that makes everyone pay their fair share of taxes. So on the money you make and take home, there is a certain percentage that you must pay in taxes. But having a simple tax rate that applies to everyone isn't fair, because, for example, if someone takes home $200,000 and then they have to pay a 30% tax rate, then they'd be left over with $140,000, which is enough to have a great lifestyle. On the other hand, if someone earns $40,000 and then they have to pay 30% in taxes, then they'd only have $28,000 left over, which is barely enough to make ends meet. So instead of having a flat tax rate in the United States that applies to everyone, we have what is called a progressive tax system, where you pay higher tax rates as your income increases. And this is what makes the system a little bit more fair, because it gives people with lower income a tax advantage to make a come up. Now, these tax rates are reflected as tax brackets, and I'll go ahead and put up on the screen right now the tax brackets for 2022. Here you can see, as a single taxpayer, you would pay a 10% tax rate on your first $10,275 of taxable income. Then 12% on your next $10,276 to $41,775 of taxable income. Then 22% on the next $41,776 to $89,075 of income, and so on. And remember, you are taxed progressively. So for example, if you make $100,000, even though that puts you in the 24% tax bracket, you wouldn't pay a flat 24% tax rate. Instead, you would only be taxed 24% on the income you made between $89,076 and $100,000, which in this case means only $10,924 would be taxed at the 24% tax rate, and the rest would be taxed at the other tax rates. Okay, so hopefully I didn't lose you with all the math, but just to reel things back in, what you need to know is that the US has a progressive tax system, which means that people with higher taxable incomes are subject to higher tax rates, and people with lower taxable incomes are subject to lower income tax rates. And this makes the tax system fair. Okay.
So let's write this in. It's people who earn more income Are you good? Okay, moving on. What are expenses? So money that goes in or out? Out from your pocket, okay? Expenses are outgoing, money for costs. Money. Outgoing money for costs. So that would be a negative. Taking it out, subtracting. Yes? Income is incoming. I'm emphasizing the in part. Money. Or we can just say earned. Okay. This is my deposits, my positives, my amount that I get to add to my bank account. Okay.
Different types of income. So for tax purposes, there are two types of income. Okay, you have earned income and then you have unearned income. So earned income is money that you receive from actively working. Okay, examples of earned income would be wages, salaries, tips, net income from self-employment, and so on. Whereas unearned income is money that you receive from not actively working. So examples of this would be stuff like, okay, interest income or stock dividends or any other types of dividends, real estate income, pension income, distributions from retirement accounts, or Social Security benefits. Now, in general, you pay more taxes on earned income, especially W-2 income, because they are subject to payroll taxes, which includes Medicare and Social Security payments. But usually your employer would cover half. However, if you are self-employed, then you must cover all your payroll taxes, which is also called self-employment taxes. That's why unearned income is typically the best type of income for tax purposes, because you are not subject to payroll taxes and sometimes not even income taxes, because on certain types of unearned income, such as the sale of assets and qualified dividends, those are taxed at a special capital gains tax rate. Whoa, Sean, so you're telling me if I don't work and I only make passive income, then I also pay less in taxes? Yep, that's exactly right. Now, of course, it takes a lot of active work and earned income to get to a place in your life where you're able to make investments that turn into unearned income. But if you want to achieve financial freedom, then the ultimate goal is to go from employee to investor as quickly as possible. And this is what is considered to be the American dream.
When you look around your town, you'll see a lot of services for you and other people in your town, and you might wonder who pays for it all. For example, in this picture, which I actually generated with AI, very exciting, you see all sorts of local services. We see some nice roads over here. Someone has to pay for keeping those roads in shape. We see a fire truck, so you have emergency services. You see a police car right over here, more emergency services. We see what looks like a hospital, maybe of some kind. Maybe this is the hospital right over here. We see a school. We see City Hall. We see a park. Who pays for all of those things, or how are those things paid for? And you might guess, based on the title of this video, that it's paid for the most part, with local taxes. Now, local taxes in particular, I'm going to separate from some of the income taxes. There's federal income tax, and there's also usually state income tax. And in certain cases, there's even city income taxes. But we're not going to talk about income taxes. Instead, we're going to talk about the two most common, very local taxes at your town or your county level. And these are sales tax and property tax.
So property taxes like on homes and real estate like buildings or land. Okay. Now, in Tustin and in Irvine, the most commonly additional tax that we have to pay is Mello-Roos. I know your parents have talked about it probably. Mello-Roos. Mello-Roos is a separate tax that we have to pay locally. So it goes directly to infrastructures like this building. So these homes that are brand new, they have to pay for about 10 years for the parks and the schools that are nearby, and they pay directly to local government to fund all those new infrastructure they have to use. Tustin and Irvine for sure. And there are some places in Orange, and if there's a new development of some sort, like bare land that has been developed, they typically have a Mello-Roos that goes with their homes. It's for about approximately 10 years. Okay. All right. So property tax, check. And then next one, estate tax. Like, to transfer assets. When someone dies. So for example, you got an inheritance from your grandparents or your parents. That would be part of the estate tax. Okay? No. I love that you guys know that I'm recording. Payroll tax. Payroll tax is different than income tax. Payroll tax is something you pay as an employee. Employer with an R. Okay? So payroll tax. which is typically a percent of salary. Okay, check. Got that. Excise tax. Not exercise, excise tax. This is typically like the gas taxes that we pay. We don't even see it as a taxed amount, but it's built into the price that you pay. You guys see the hikes here and there with the gas prices? It's because of that tax. The excise tax has increased all of a sudden, or it's been decreased. So that would be like gas. Like bottles and cans, they have a CVR. That's a tax. That's an excise tax, right? So when you buy a case of water bottles, you pay for that price for the water plus whatever CVR that they tack on per item, 5 cents per item.
Like the bottle? Mm-hmm. So like a card that you pay for that,
Yeah, I guess in a way. Yeah. Bottles, cans, but these are refundable, right? Yeah. So, but gases are not. Okay. Another thing, let's see, one last one, gift tax. So that was another shocker for me too as an adult. You want to hear it? Miss Byun was surprised as a full-on adult that I had to pay for my lovely gift card that I won. I had to pay taxes on my gift. Exactly. You have a big chunk of it that goes towards taxes when you win the lottery. Okay? It's typically about 40%. 30 to 40%. They can. That's why people choose to pay over time versus a big lump sum. So you pay just a little bit at a time. Yeah.
So if you won the lottery, theoretically, is it better to just have
I think it's up to an individual. Like I said, like this is not financial advice for you to take to heart. It's just information that I want to impart with you that you are being taxed for that gift. It's up to you on how you want to pay that tax. Even retirement has a different kind of taxing. So there's like Roth IRA and then there's traditional IRA. And those, one of them is pre-tax amount that you already earned and it goes directly into it. But when you withdraw from it, when you retire, you have to pay taxes on that. And then, no, it's not again. It's never been taxed. That's money you never taxed. And then there's type where you take the money after you have netted and you pay into that account after taxes, then you can withdraw that without having to pay taxes later on. So there's different ways, okay? All right, so gift tax is one of those gift cards, lottery. Your parents decide to gift you like $100,000 for some reason. One day, okay? That gift has to be taxed and you have to pay tax because it's an income into your account, okay? All right, are we good? Okay, next page, let's see. Sales tax, income tax, let's look.
Tax is probably the first type of tax that I became familiar with even when I was very young, because you probably noticed that if you go to the store and let's say it says that something costs $2, and then all of a sudden when you go to pay at the cash register, they're charging you $2.14. So what they really did is they charged an extra 7%, so plus 7% here. 7% of $2 is 14 cents. They added that on. That added 7% or that added 14 cents, that is sales tax. Now, it's not always 7%. It depends on the state. It depends on the city or county that you're living in. But just as an example, right now, at the time of this video, and this might change over time, Virginia as a state, the state of Virginia, has a 5.3% base tax. But that's base sales tax. But that's not the only sales tax. The local towns and communities can add sales tax to that, so it could easily go up to 7%, like this example we just showed. Now, it's not that everything that you buy or sell will have a sales tax of exactly 7%. In fact, some communities try to use this to motivate certain behaviors or others. For example, you might have a higher sales tax on things like alcohol or cigarettes, and you could have a much lower sales tax or no sales tax on things that are considered necessity. For example, food, non-prepared food. Let me write that down. Actually, that's a lot to write down. Non-prepared food. So if you were to just go buy groceries, that oftentimes has no sales tax or much lower sales tax than if you were to say, go to a restaurant and have prepared food, where it might be, say, 7% or a higher sales tax. Why would that be? Well, the town is saying, well, everyone has to buy food, and especially if they're cooking it themselves, but not everyone has to go to a restaurant. A restaurant is more of a luxury. So we'll tax the luxury more, but the necessity we will tax at a lower rate.
Let's say we buy one backpack. One single backpack. Okay.
Okay, I'm so glad
Miss Ben, we're listening, just so you know.
Would you pay exactly $67.99 to take that out of the? There you go, 0.08. And then you get $5.44 as your tax amount that you would have to pay in addition to $67.99. So the total would be, total with tax will be $73.43. Okay. Let's say you buy 4 books.
We're all just gonna work for you.
4 times $4.50 is $18. We take that $18 and then we multiply it by the percent in decimal form, 0.08, and you get your tax amount of $1.44. Okay. Once you have $1.44 as your tax, we add these up and we get the final total of $19.44. To convert sales tax,
Have you ever watched
It's not even great.
to a decimal,
She has the other one.
move
Obviously not. They just
left 2 places. Sorry, 2.
Yeah, come on. I'm just
Which direction are we moving the decimal if we're changing from percent to decimal? Left 2 places. Okay. Depending on where a worker lives, income tax may have to be paid on a federal level, a state level, green, and even sometimes a local level. But some people find it very beneficial that they get to keep that money, so it becomes like a really incentivizing reason for them to leave California and go to another state. Anything from what? What do you mean? Yeah, sales tax. New York does not have a sales tax. So a lot of people like to go shopping in New York. I think that's correct.
Actually, in India, they like pay the bill to restaurants, like other like services.
So in Korea, I'm speaking from experience, they have something called a VAT, VAT, value added tax. Okay? So you go to a restaurant and you look at the prices. Those prices include VAT. So that includes the service fee, so it's tip, and taxes, all built into the price of your food. So what you see is what you pay. Yes. Say again? So duty free is duty free because you're in this ambiguous state of not part of the state, not part of the country, not part of the government. They have a small space where they can say, this is gonna be the transitional place between countries. So we can't tax these international people who are passing through with the same local tax or whatever it may be. So they just make it duty free, making it tax free.
Wait, so do they voice that for them?
No, because if you're like doing a layover,
And your destination, that's why they check for your boarding pass. When you go to a duty free shop, they check for boarding passes.
Do boys have to pay for like taxes?
Say again?
Do the boys that duty free have to pay for income tax?
Yeah, of course. They're local people who are working there. What just happened? Oops. This is the IRS. Well, it can be, but it's also a good deal too, because they usually make it incentivized by having limited items, like specialty items that normally you wouldn't see in other stores, available at those stores. Yeah. So like even like makeup and perfume, they have sizes that you would normally not find in local other like retail shops. So they make it enticing for people to buy at duty free. All right. So, an agency responsible for collecting federal tax and enforcing federal tax laws for the United States is called? IRS, aka Internal Revenue Service. Now, you know those things called Social Security number? That is supposed to be an ID only for paying taxes. But each person who is a citizen in this country get one. As soon as you're born, you get an you get an SSN. Yeah. What? You can't change the number. You could change your name on it, but you can't change the number. Your what?
What if someone finds out what your SSN is?
Yeah, that would be horrible. So a lot of people have a hard time recuperating from such identity thefts. Okay, IRS. All right, are we good?
yeah, that's a good question.
What? What's the question?
IBC has my social security.
Okay, you want to know? Okay. Long ago, in the days of FDR, Social Security came about to benefit a lot of citizens. I'm going to pause this recording. There are different kinds of forms that you have to fill out and understand in order for you to file taxes, okay? So, let me see. What we are going to work with is primarily W-2, okay? W-2 shows income taxes, and withholding. for the year. For the year. And it's used to file. Oh, you have to pay separate taxes. One for state and one for federal. So every year your parents have to file both. Used to file federal and state taxes. Okay. W-4 is a form that tells employer. I'm going to change the color. So your boss at HR, employer, how much money to withhold from each paycheck. Okay. And 1040 is the official form. So this is your file your taxes part, okay? TurboTax has electronics, change it to a soft copy instead of a hard copy paper where we used to actually pencil in everything onto a form. TurboTax has done all the hard work of actually having question prompts that take you through to fill out the form as accurately as possible, okay? So that's what most people use nowadays, show all income. But I don't want that to be a mystery for you guys when you guys get older and you end up getting a job and you're paying taxes. I don't want that to be a mystery of, oh, just this crazy computer program that takes care of all my taxes. I don't want you to think that. I want you to know what you're doing with it. So any deduction, okay. It also tells you if you have, see if you owe or get refund for the year. Okay. I'm gonna skip paycheck. You guys already know what it is. I'm streamlining for time right now. So part of pay that you don't get is called tax withheld. Okay. So part of pay you don't get, but it's sent straight to the government as taxes. Okay. Thanks, Luke. Okay. So here's the flow chart. Okay. You get a job. Great job. You got the job. HR calls you in. You have some paperwork to fill out. Most of which are financial things. One, you are going to be asked to file a W-4 at the moment that you get hired, whenever your HR person gets you started, okay? It tells the employer how much to withhold. That withholding will go towards like a little savings under your name with the IRS, okay? So what that does is it withholds a certain amount. So in the end of that year, they calculate, okay, so you owe the government this amount of money for making this much money. That tax amount that you owe, it gets deducted with that withholding you have with the IRS already. Does that make sense? The withholding is something you pay in advance directly from your paycheck, so that way you don't have to pay so much at the time that you are getting your taxes paid. That's why a lot of people get refunds, because typically they withhold more than what they owe. Does that make sense? Yes? Take a look at this page, understanding your W-2. This is what you need to submit to me today, okay? This is what a W-2 looks like. It is sent home to you, to your permanent address that you provide your employer every year. It only comes around January, so let's go ahead and fill it out, okay?
Now that you've gotten your W-2, you might be wondering where all the numbers on the form go on your tax return. Well, you'll find that information in this video. I'm the Tax Geek, and here's what to do with your W-2 oversimplified. Before we start, this video was inspired by this comment. If you'd like to see your suggestion turned into a video, please let me know in the comment space below, along with any other questions or comments you may have. Here is Form W-2. This is the official IRS version, but most of you will receive something that looks quite different. As long as the form has all the boxes of the official form, it's perfectly okay. In a video I made at the very start of this channel, I took a deep dive into Form W-2 and explained where most of the numbers came from. Now it's time to learn where all these numbers go on either your Form 1040 or other schedules or forms attached to your return. Let's start with Box 1. These are your taxable wages, tips, and other compensation, and it is placed on line 1A. Box 2 is your federal income tax withheld on these wages. This is entered on line 25A on page 2. Now the figures in box 3 and 4 don't go directly on your tax return. However, you may need to know them. If you have multiple jobs and the total Social Security wages from all your jobs total more than the maximum wages subject to Social Security tax, which for 2025 is $176,100, you are entitled to a refundable tax credit of any excess Social Security tax that was withheld. That credit shows up on line 11 of Part 2 of Schedule 3 and ultimately lands on line 31 of Form 1040. Boxes 4 and 5 involve Medicare tax. For most taxpayers, this has no bearing on the tax return, but if you have enough compensation to trigger additional Medicare tax, the Medicare tax that was withheld needs to be reconciled on Form 8959. There is a more detailed video on the additional Medicare tax that shows how all this works. Box 7, Social Security tips, usually have little actual bearing on the tax return, unless, as with Box 3, your Social Security tips combined with other Social Security wages exceed the Social Security wage maximum. It's rare to see allocated tips, which are shown in Box 8. Allocated tips are definitely a story for another video. The number in Box 10 are dependent care benefits your employer gave to you. These have to be shown on line 12 of page 2 of Form 2441. If your actual dependent care expenses are less than your dependent care benefits, any excess benefits become taxable income and are shown on line 1E of Form 1040. Let's skip ahead to Box 12, since amounts in Box 11 are exceedingly rare. Several different items might be in Box 12, each accompanied by a different code. Some of these items are merely for your information, and others have an effect on your return. Let's look at the most common codes. Code C, Taxable Group Life Insurance. This is the cost of any group life insurance over $50,000 that your employer provides you. The taxable amount is determined by the amount of your insurance and your age. This is primarily for your information and is included in your Box 1 wages. Code D, also E, F, G, or H. These are pre-tax retirement plan contributions. Code D indicates a 401k deferral, and the other codes are for different types of plans that operate in much the same way. This amount is not included in your Box 1 wages, but is usually included in your Box 3 Social Security wages. Much of the time, this is primarily for your information, but if your income falls within certain guidelines, the amount is entered on line 2 of Form 8880 to claim a Retirement Savings Contributions credit. Code Q, Non-Taxable Combat Pay. Military pay received when deployed to an active combat zone is non-taxable. However, this amount may be included when computing an earned income credit or refundable child tax credit, if including it would result in a higher credit. Code T, Employer-Provided Adoption Benefits. These function much in the same way as the child care benefits described earlier. These benefits must be reported on line 20 of page 2 of Form 8839. If these benefits exceed the actual adoption expenses paid, and the adoption has been finalized, the excess is included in taxable income on line 1F of your Form 1040. Code V, Income from exercising a non-statutory stock option. Handling this code is rather complex and will be covered in another video. Code W, contributions to a health savings account. This is the total amount both you and your employer contributed to your health savings account. This amount is entered on line 9 of Form 8889, but usually doesn't affect the rest of your return. Codes AA, BB, or EE. These are also retirement contributions, but they are made on a Roth basis and do not affect the amount of wages in Box 1. Like the retirement amounts described earlier, these contributions can also qualify you for a retirement savings contributions credit if your income falls within the guidelines for the credit. And lastly, Code DD. This is the cost of your employer-sponsored health insurance coverage. This amount is non-taxable and provided for your information only. It does not affect your Form 1040. In Box 13, you'll most often see the retirement plan box checked. If you're eligible to participate in any employer-sponsored retirement plan, this box will be checked. If this box is checked, it may affect your ability to deduct a traditional IRA contribution. Box 14 provides any additional information your employer thinks you should know. Here you'll find Railroad Retirement Tier 1 and Tier 2 contributions, after-tax contributions to a company or government retirement plan, contributions to a state temporary disability program, and charitable contributions such as United Way made through payroll deduction. If you contribute to a charity through payroll deduction, the amount can be added to any cash charitable contributions you are claiming on Schedule A if you are otherwise able to itemize deductions. Finally, boxes 15 through 20 show state and local wages and tax withheld. These amounts go as instructed on your state or local income tax returns. It should go without saying, but if you use online tax preparation and enter the numbers from your W-2 correctly, the software will place the numbers on all forms in the correct space W-2 go on your tax forms. Of course, there are additional ways your W-2 can affect your tax return, particularly when it comes to Box 12 codes.
Real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
You've got to get a hold of yourself. yourself.
Come and check.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
You've got to get a hold of yourself.
Come and check.
yourself.
Come and check.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
You've got to get a hold of yourself.
Come and check.
yourself.
Come and check. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Stopping me.
0, 1, 2, 3. Let's get started. Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
You've got to get a hold of yourself.
Come and check.
yourself.
Come and check. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
0, 1, 2, 3. Let's get started. Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
You've got to get a hold of yourself.
Come and check.
yourself.
Come and check. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
0, 1, 2, 3. Let's get started. Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
You've got to get a hold of yourself.
Come and check.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me.
yourself.
Come and check. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Stopping me.
0, 1, 2, 3. Let's get started. Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Stopping me.
You've got to get a hold of yourself.
Come and check.
yourself.
Come and check. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
0, 1, 2, 3. Let's get started. Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
You've got to get a hold of yourself.
Come and check.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
yourself.
Come and check. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
0, 1, 2, 3. Let's get started. Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
You've got to get a hold of yourself.
Come and check. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
Oh, that's real good.
Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me. Ain't nobody stopping me.
You've got to get a hold of yourself.